Good afternoon, everyone. We will be discussing upcoming US elections. Now, I think we're smarter than that, much smarter. So I have amazing panelists here, and we did zero preparation, but I love it because they really know this stuff. So I will introduce from my left, who is up there, Tom Grant, Uptopia, Vice President of Research, Sarah McKenna, Chief Executive Officer, 𝐏𝐀𝐍𝐄𝐋, Joseph Sommer, Managing Director, Ernst & Young, and Pamela Munger, who is coming from London. Actually, she's from Texas, but she lives in London now, and she's from Vortexa. What we're going to be discussing is alternative data, which is a fascinating topic. That's really a way to generate alpha, not only for hedge fund managers, but also for private equity and corporations. New sectors are emerging all the time. International markets are opening up. Some are closing down as well, actually. But we will discuss also trend in monetization. Where can competitive advantage be found? Growing use of alternative data, as I mentioned, not only in hedge funds, but also private equity and corporations. And how due diligence is conducting and transforming this space. We will also talk about current budget trends, future spending. And let me just, Tom Grant is next to me, so let's talk about how do investors use app data like yours, and how is it changing? How is it changing from, let's say, 3-4 years ago?
Yeah, thank you very much, Vidak, and thank you for having me here. So when I'm talking about app data, I mean mobile apps, so what's on your phone. And the way that I like to think about it is that when you open an app, you are basically a customer of that company, whoever's app that is. So mobile app data really is tracking customer activity. And so what we've seen is that when companies started to go public that were mainly driven by user growth, so like think about Facebook, it's the most obvious example. Public company investors wanted our data to track user growth. And that use case lasted for a number of years. But so many companies and their apps now are mature. Finding new growth is hard. And so what people want to know now is how are people interacting with these apps? How much time are they spending? Is that changing? Are new users behaving the same way as older users? And what we found is that our base data set, which is around since 2016, no longer answers those questions. We needed to come up with new versions of mobile data in order to address the questions that investors really want to know. So now what we're seeing is how deep can we get as opposed to how broad can we get? And the more that we do that, we find that, you mentioned due diligence. Private company investors wanting to do due diligence on an investment can now use our data to get a really deep understanding of what are customers for this company actually doing and how they behaved over the past couple of years. So as we continue to think about investor use cases, what they want to do, what we're finding is that the deeper that we go into actual customer behavior, for example, following the customer journey from opening the app to making a purchase, those are the kinds of things investors really want to know, and that's where mobile app data is going.
Thanks, Tom. Let's talk more about data. This is data revolution. One of the themes of this conference is not only alternative investments, but it's data revolution. Things are just driven by data. I don't want to say oil is new data, but it's kind of boring to say that. So how important is data quality, and how do you build trust, Sarah, from your perspective?
Oh, well, thank you, Vidak. So 𝐏𝐀𝐍𝐄𝐋 has a data platform that ingests and delivers data, mostly web scrape data, which is notoriously difficult because websites will change. Bot blocking is an area of tremendous investment. And it's hard to get good quality data. So this is something we think about quite a bit. We have architected our platform over the last 15 plus years to validate every step of the way, every step of the data journey. We're looking at, we're able to validate what is seen on the web page or in the backend API or the document. We're able to validate to all kinds of rules, whether it's visual or syntax or value ranges, you name it. we have the validation happening every step of the way. And then because validation is very noisy, we also employ success criteria to make sure that the data coming across is within acceptable error thresholds. But not just that, right? You talked about trust, right? Quality is a part of trust, but there's something else as well. We'll get questions sometimes. We sell data. We license our platform, but we also sell managed data services, so we're also a data vendor. And sometimes we'll get calls and say, how come you have a gap in your data on this date? And we will say, well, according to our audit logs, the website was down. We have screenshots. We have, all the records of the site being down. We have the tickets that were opened. We have all the records that the team created. And when it was back up, we started collecting again. And they're like, but I don't understand. This other vendor doesn't show that a site outage. And I'm like, well, if you want us to move the data, we'll give you that right. You can do that on your own. We're not going to do that for you. But this is where it comes up to trust, right? We have thorough audit logs, and they demonstrate how the data was collected, when it was collected, what version of the agent, right? We call them agents, that perform, automated tasks, what version it was, sort of what the schedule was, whether these agents were behaving responsibly according to codes of ethics and operating guidelines that we've established. And this all, really drives a lot of trust. Our stakeholders and the stakeholders who are in your data operation should be able to go in their own schedule and see what happened when, why is the data slightly different, what was done about it. And really that breaking down of silos and enabling all those stakeholders to go and see on their own accord is what drives trust.
Thanks so much. Now moving from data trust to regulation. What's more important, regulation or data trust?
There's a real desire among the asset management community for new data sources that can differentiate your investment models. If you use the same data as everybody else, you're likely to get the same results. So is there alpha to be gained from looking at things that are non-traditional? And there are many companies now that are saying that with the digitization of their products and services, they have so much more data available that was not available previously. However, there are very big concerns about privacy and consent, anonymization, can data be re-identified, and bad actors. And so these things can impede a corporation which has a primary business such as transportation or beverages or travel from embarking on a journey to add a supplemental service to commercialize or monetize their data. And so a big part of what I do is try to understand the risk involved in commercializing that data and come up with mitigating plans so that you can increase your revenues if you're a corporation that has valuable or potentially valuable data, and do so in a way that isn't going to be have too much liability, potential liability. So Rule 1033 that the Consumer Financial Protection Board recently finalized and was immediately hit with a lawsuit would require positive consent for any payments transactions that are now being used to support investment models where you can see what people are buying, anonymously, or and forecast revenues and things like that for listed companies. And so that'll be a sea change if that goes through, because it'll disrupt the model where there's basically, if you don't opt out, we're going to use your data to a positive consent. And so there's a potential for disruption to current data sources that a lot of asset managers rely on for their investment models. So regulatory changes can be, quite severe.
Thanks, Joe. Moving from regulatory to international trade. So the world trades over 3 trillion worth of waterborne energy cargoes annually. But this industry is one of the largest unstructured and opaque marketplaces on the planet. Data is very fragmented and incomplete, leaving businesses to make high-stakes decisions in the dark. Pamela came from London to tell us, how is it all done? What do you guys do?
Good question. So you've, I think, shown the value of the seaborne cargoes. So what Vortexa does is we track every seaborne cargo that moves around the world carrying energy commodities. So that's crude oil, refined products, LNG. We have onshore storage tank data as well, over 20,000 storage tanks. It's 200 billion data points that we get. We use AI. We have about 40 data scientists. We have about the equal number of analysts who are, so we use AI to gather, ingest, and really look at the data for data quality, because we also get sort of customs data and all sorts of kind of other data as well, other than the signaling data. So we also use humans, we use analysts to look at the data and see any kind of anomalies that are happening in these data points, so that you can really use or show the Vortexa data to the world in terms of insights other people can use. So that's kind of how we do it. Further to the point of the $3 trillion waterborne energy market, you also, if you think about the oil market, I would say half the oil market is traded on the sea, and on the sea, those movements drive close to 90% of the price movements. So it's a really important data set to look at if you're looking at any kind of supply and demand balances globally. It's probably the most important data set to look at because it's real-time data, it's primary data, it's not derived. And from that primary data, which goes back to 2016, you can then look at many different patterns, not just about the cargo on board, but also about all of the freight drivers around it, because the cargo, of course, doesn't just move by itself, it moves on oil tankers, different size oil tankers, another tradable commodity.
That's very fascinating. Thank you. Thank you for sharing with our audience. Moving to Tom, how is Atopia, what is Atopia doing to meet investors' needs?
That's a great question, and it ties back a lot into what Joseph was saying about changes in regulation. So what we've seen is that the number of mobile user panels in the US has more than halved over the past 2 years without this new Consumer Protection Bureau regulation that Joseph mentioned coming through. Getting this data on what customers are actually doing from a mobile perspective is getting harder and harder. And in a way, in a sense, that actually plays into our hands in that we don't have an existing mobile user panel that we've done through some sort of less than up and up means. We are looking to build one the right way. And so, as I mentioned before, our customers want to know more and more deeply what exactly app customers are doing. And by building a user panel the right way, which it's very clear that you are opting in, that you are receiving some sort of compensation for what you are doing, whether it's you're getting a coupon, whether it's a direct payment, whether it's some sort of additional access. If you're giving something that a user wants and they're willing to share their information with you, that then creates a really stable, high-quality panel. Getting back to what investors want to know, are people under the age of 18 spending more or less time on Roblox this month than they did the same month a year prior? For that kind of information, we're pretty good right now. But to really answer that question, we are investing more and more time and energy into building out that specific user panel in the proper regulatory fashion.
Can I add to that one?
Please go ahead.
Because that's a great point, Tom. And I think that's the trajectory we're on, where consumers, as consumers, we're allowing information about us to be used. And what we don't like is when we're not told how it's being used and we're not given the option to opt out. However, if you're offered incentives to use it, I think many of us, not everybody, there's a group of people who are committed to privacy and anonymity and they'll always opt out. But most of us, enough of us are comfortable as long as it's transparent and controllable and where we're compensated, that we're happy to exchange some of our personal information in return for something we see as value. And I'll give you an example that happens all the time today, which is with shopping. Supermarkets now have a pretty robust business where if you opt into their price club, you're actually agreeing to share data about your purchasing habits, but in return, your Tide is $2 off and things like that. And so that idea of compensating in some capacity consumers for releasing their information is one that's going to take hold. And I think as investors, what we want to know is if the data sources we're acquiring have that clear opt-in and stability with the information that they acquire. What you want to avoid is investing in a company that appears to have a lot of valuable data assets that are based upon sketchy means. And I do know of a story of a major card company that acquired another company, and they discovered that the data was being obtained through, not the most integrity-driven approach. And so therefore they put a halt on all data collection at that subsidiary, and the value and the risk, the value of their investment decreased, as well as it created risk for their brand, which was worth, multiples of the acquired company. So you need to take care of consumers who are providing data, compensate them fairly in order to build a stable source of alternative data. And then as investors and as corporations acquiring company, you want to make sure the partners you're working with, really have that stable data supply.
Thank you, Joe. Joe, just before this, discuss regulatory issues. So Sarah, we've seen a number of lawsuits in the web data space. How do you mitigate the risk when dealing with data today? You're an expert in that.
Yeah, this is a great question. So there really are a very large number of lawsuits. I'm sure you're all aware. So 𝐏𝐀𝐍𝐄𝐋, started with the finance industry, right? We brought the 𝐏𝐀𝐍𝐄𝐋 operating guidelines to the Alt Data Council, and we worked for several years with the general counsels of various SEC governed institutions, and we published the Web Data Collection Considerations. That's under the Financial Institution Standards Division, which is under SIA, which is a standards-making body in the software industry, and they have a lobbying arm in DC. We worked closely with the SEC. I've actually been on panels with the SEC talking about the best way to work with web data, and I think in the finance industry, we're pretty aligned. When ChatGPT came out, there was, obviously a flurry of lawsuits in our space, and so this has we've obviously there's a big renewed effort to get regulation and regulators aligned, and so right now we're working with the Alliance for Responsible Data Collection with OpenAI and Common Crawl and others, and we've been in DC and we've been lobbying, and we're in the room where we're discussing controls on web data, how to protect copyright, how to potentially enhance copyright laws to protect creators, and the folks that are really struggling with the amount of web data that's going into LLMs, reproducing their creative works very much in their style and tone, and not sharing any value with them. But we're in the room to make sure that they understand the mission-critical use cases that will not get legislated away. For example, robots.txt, right? We've been in the room with the guy that wrote the robots.txt protocol, talking about how to enhance it to get AI controls and to signal, website preferences for the end use of that data, how to record it, how to express it, and of course we would just include all of that in the collection, audit trails, and everything else. But we're very clear. We're like the robots.txt only names a few different bots that are allowed to pull data, and they're all crawlers. They're search engine crawlers. They're not scrapers, right? Scrapers, and they often will forbid certain directories, like the search directory. If you're looking for a price, if you're looking for review data, if you're looking for sentiment, you want to follow the consumer, right? In a post-cookie world, right? You've got to do searches on these sites. you can't follow the robots TXT. And these are mission-critical use cases. I mean, we have over 20 government agencies. They're fighting human trafficking and all kinds of things. And the communication shows up in reviews and places you wouldn't expect, right? We can't follow robots TXT. The investment industry can't follow robots TXT for the most part. I think we have one customer that does. Nobody else does. Terms and conditions, same problem. It's, you could say with LLMs it's machine readable. It's not machine readable. It's a huge expense. Nobody's telling you when it changes. It's just very problematic. The bot blocking that sites are doing is, it doesn't really work. Nothing really works. So what we've been advocating, and I think we're gaining, we're really gaining folks' ear, is to have a set of standards for responsible data collection that we all agree to, we align on, and we implement as a standard that can be attested to like SOC 2, right? And so that's what we're proposing, that's what we're advocating. That's, we've built our entire platform to support this. And, so absent litigation, we're obviously way ahead of the law. There are certain things that we will not do. We will not log in, right? That's accepting terms and conditions. When there is some kind of a click wrap that forces you to accept the terms and conditions, we won't do that, right? If there's any personal data, right, we have to make sure that it's all handled with consent and in line with CCPA and GDPR. If there's copyrighted information, it has to be a transformative use case, et cetera, et cetera. So basically everything that's published in the Web Data Collection Considerations under FISD, we're following. And I think most folks in finance are following. But these are concrete steps that you can take to mitigate risks. And we're continuing to work on setting new standards to continue to chip away at the risks that we are dealing with every day.
Thank you so much, Sarah, for your remarkable insights. Excellent, very, very clear. Pamela, tell us about your technology breakthrough. How you guys actually accomplished what you just told us?
Yeah, that's another good question. So we use, there's a satellite data that's become available in the last few years. So we get satellite data, AIS signals, and then we also combine that with customs data. So it's it's a lot of data set that's coming in sort of fast and furious, and you have to be able to ingest that data and assign it to a vessel. And then if you're looking at a subsegment which gets a lot of news headlines, the dark fleet, the fleet where the signals go off, you need humans to then interpret where those signals go missing and where those vessels reappear to understand the supply chain. And then you actually go and what we call patching, data patching, is you tie that vessel on to that particular movement. So we're really, I think, able to use that combination of AI and human expertise. And yes, we've started right now in the energy commodity sectors, but I think it's a blueprint that we can carry over to other segments, certainly of the energy world and beyond, right? Because the seaborne market also contains commodities, metals, other commodities other than energy. So you have metals, you have ags, and it can. This particular model can be carried over, and we can open up shed some light on those markets as well.
Wow, truly fascinating. Thanks for sharing. Tom, let's talk about money. You guys do things for free, or you charge people?
We tried to, but people kept wanting to pay us.
Oh, okay.
So
all right. So let's, on that
are.
note, let's talk about data budgets in 2025.
Now, it's an important question for data vendors, right? This is the macro signal that determines the course of our revenues. And for other data vendors out there, I have a message for you. It's going to be okay. For all you data buyers, I have a message for you. We know what you're up to. But more specific, actually not specifically, just more generally, we were so accustomed post-COVID to global asset prices rising, investors having more money and more money to spend to accumulate alpha, that when that stopped, when the Federal Reserve started raising interest rates, we were not, as an industry, we're not prepared. And so then it started to raise internal questions like, oh, is our product not good? Did we miss our ICP? It started, and we started asking the wrong questions, where really what was happening was that as global asset prices went down, investment managers who charge a fee on assets, their revenue went down, which meant that their budgets got squeezed. This year, asset prices are largely up. Revenues are largely up for investment managers, which means data budgets are going to be okay. So you can try and tell me your data budget got cut, and I know you're not telling me the truth.
Love it. So you're making lots of money, huh?
We do our best for our customers.
Okay, full disclosure. Let's talk about monetization. It's a quite interesting topic. Sarah, so what are some of the newer ways you see alternative data being monetized? And then the same question for Joe, or for Joseph, yeah. Sorry, I was thinking I was saying Tom, but I'm a little bit tired from yesterday. I was performing in 3 languages. So I'm adapting to English now. Sarah.
Yeah, so I think it's no surprise to this crowd that the new areas where alt data is being used are all in generative AI and training LLMs. 7 years ago, when I first started selling into this industry, it wasn't so advanced as it is now. But people are looking for very clean, structured data sets that not just sort of show signal in investment or sentiment or how a particular brand's products are being adopted, but also just descriptive language and chatter on chat boards because they're trying to train their own internal LLMs. So what we're seeing is kind of an explosion in demand across the board for full catalogs, all kinds of data. But again, with the mind to regulation and risk, data that is well documented, very transparent how it was collected, audit logs, what came from where, when, right? Because there may be some alteration to copyright laws down the road, and all that good stuff. But yeah, for us, it's mostly AI.
Okay.
It's driving new use cases.
Joe, if you can briefly discuss it.
Thank you. Sarah, I share a lot of your thoughts on where this is going and the value of data. You can think of data as kind of the nutrients or fuel that is going to enable a whole new era of digital solutions. And it really is kind of breathtaking. I remember in the 90s working with a company that was going to do natural language database queries where you could talk to the data. What were sales yesterday? Which of my regions have the greatest growth this year? And just really have a conversation and get answers. And what was ironic was the genius behind the technology couldn't have a conversation with a normal person. He had to have an interpreter. But that day is here now where those companies exist and you can have conversations about sales, customer service incidents, complaints. All kinds of information is now going to be available. And there's so much focus on the enabling technology. I spend most of my time on the data that enabling technology uses. And this is where it's very exciting. If you think about large language models and how they're going to change things, I've been involved in what we're calling knowledge management for Gen AI, where once you get past your initial use cases, let's say the most typical one is coding, programming, and reducing programming time. It really is a huge productivity enhancer for developers, quality checking code, a variety of things like that. And you start to say, how can I go deeper within a company or a sector? That's where you start to get into specialized knowledge. And I think those specialized knowledge data sets are going to be what differentiates or distinguishes firms that really grow competitively, because they'll have information that used to be the purview of highly trained and experienced individuals. Those individuals can now create agents based upon what they know. There's the old joke about the person who was asked to fix a train engine that didn't work, and he walks around the train engine, and then he opens up his toolbox, takes a wrench and gives it a whack, and then the train engine starts, the locomotive starts, and the town says, "How much do we owe you?" He says, $1,000. They say, "Well, can you give me the itemized bill?" And he says, "Sure." Hitting the train, $10. Knowing where to hit it, $990. And the idea being that knowledge is a valuable asset. So for people with specialized skills, the ability to put them into a digital format and then make them almost componentized and extendable, that's a really exciting future. These data sets are going to be developed by specialists with the knowledge, with the ability to determine what the market needs. And then there's going to be a whole economy built up around really trading knowledge and skills in a digital format in a way that we've never done before.
Thank you. Yesterday, we discussed due diligence on hedge fund managers. Today, we're talking about data. So, Pamela, how you guys help private equity corporations, hedge funds in conducting due diligence?
Yep. So, due diligence, you can use Vortexa to. Most recent examples have been some of the latest vessels that have been sanctioned by the U.S. government, and the ongoing sanctions on Russian Russian trading vessels, as well as Iranian vessels, but various once. The Russian invaded Ukraine. We had the sanctions start, and that was a few years back. And we've seen recently some breaking of those sanctions, of course, and our data can give a hint in terms of who could possibly be doing that. So the due diligence has been used by various firms, especially kind of American physical traders who don't really want to appear to be using vessels that have been sanctioned or that have carried sanctioned material in the past. So that's certainly a use case. What is tricky about that, of course, is these vessels change hands, they change controllers, and it's really important. We talked about the data validity of going in and really making sure that you're exposing the correct data when it happens, because it does change so often, and some of the models can't necessarily always capture that.
Thanks, Pamela. Same question to you, Tom and Sarah, on due diligence.
Essentially, all of our data is used for due diligence in some capacity. So public company investors they're kind of just doing due diligence on the companies they're invested in using our data. Like, are Duolingo's DAUs going to meet market expectations? Where we run into a little bit of difficulty is more on the private side, when there's a one deal that someone's working on, and our data set is massive. We have millions and millions of apps that we're tracking. And so our price just doesn't work for someone who has like a 6-month or a 2-month project that they're doing due diligence on. And so while we're still working on solutions for that type of environment, one thing we are thinking about is there partitioning that we can do where you, instead of getting the entire data set for the full price, you're getting just the things that you care about that allow you to go deep and do the due diligence that you want in this one particular environment right now. But in general, our data is incredibly useful for due diligence across the board, but the use case doesn't always match with the data set.
Please go ahead.
I would echo what Tom has said. I mean, a lot of our data is used for due diligence. It doesn't have to be, but even some of our brands will be checking on their retailers. They're checking, inventory and pricing to make sure that they're honoring pricing contracts and agreements and availability within, featured markets. And in the investment space, there's obviously a lot of checking of store locations. Are they open? Are the hours open? Are the items available? Are there long wait lines, for various restaurants or delivery, drivers? These are all indicators of, how well a company is functioning, how well a market is functioning. So you could call that due diligence or just kind of
Process, due diligence.
investment
Yep.
analysis.
Mm-hmm. Investment analysis, yep. Same question for you, so we can clarify for everybody.
Yeah,
From your point of view, you guys are, Ernst & Young is very different than the other three entities here, so.
Well, it's good that we're in the cutting room because this is on the cutting edge. And, data-driven due diligence being the concept. And so if an owner of a company asserts that their growth is a certain percentage and they have a certain number of customers and other factors, there should be data, evidence, digital fingerprints that support those claims. And so that's one of the ways now that if provided you can get access, depending upon how fast an acquisition or deal is happening, that you can validate, important claims about the viability and health of a business. And coming from a Big Four consultancy advisor, I'm in the technical consulting area for financial services of EY, which is, of course, an accounting firm. We take a very evidence-based approach to due diligence and to data valuation. So if you make claims about the value of your data, which oddly, there's no GAAP standard today to determine the value of data, so you have to use different techniques, market value, discounted cash flow, replacement costs, other methods. But in any case, as part of due diligence, there could be claims that are vital to the profile of the business that could be validated with data. And so just like an internal audit, you would seek that evidence to substantiate any claims.
Thanks so much. I would look for alternative data for each one of your sectors, specific sectors. This is a TikTok now, so 55 seconds each.
For mobile app data, we see the same use cases still working, but innovation is what matters. So we're continuing to take our data for quants and find ways to have that signal happen more frequently. And then for our fundamental investors, we're trying to find ways to go deeper on the customer experience to get the insights and answer the questions they want.
Thank you.
Yeah, with web data, the outlook is bright. Everyone needs web data to train their AI, and they need web data that's collected in the right way to make sure that AI is sustainable and defensible 5 years down the road.
Thank you. I agree with Sarah a lot. Responsible AI, and it's exciting, these technologies, the transport and the shipping, the digital apps. Like, I could see so many areas to innovate with that. So I will just say that from my perspective, the big frontier is going to be unstructured data combined with structured data through conversational interfaces. And you're going to need to make sure you have the rights for that data. You're going to have to make sure that the data is of sufficient quality. And then you're going to want to have it distributed in a way that's, easily integratable. So there's a lot of exciting things ahead for alternative data for investors.
Pamela?
Yeah, thanks. So one of the things that investors are always looking at, banks, the government agencies, OPEC, are supply and demand balances. And certainly that's what we can show in a real-time way, what the supply and the demand will be in more of a realistic function. So typical supply and demand balances will be demand minus supply at the moment, at the month, at the given time period. But realistically, the supply moves around in a much different format. It could arrive 4 months later. So we can really give a good idea of what the real-term supply and demand balances are doing, and thus the fundamental analysis behind it.
Thank you all for your remarkable insights. This was really fascinating. Thank you.
Thank you.